Welcome to Global Innovation. I'm your host, Chris Graham. Three experts will join me today to look back on 2016 and forward to 2017. We're going to look at the areas of digital storage, semiconductors, and related devices. On our panel today is Tom Coughlin, President of Coughlin Associates, Bill Weir, Senior Director of Marketing and Business Development at Diodes, Inc., and longtime industry analyst Steve Orr. Tom, he has extensive experience in digital storage devices and applications, both as an engineer, an engineering manager, and corporate executive. Bill Weir's main focus is in the PC, server, and mobile market segments. And Steve has served as a director in Gartner's Semiconductor Research Group, as well as an editor of EETimes, Planet Analog, and Embedded Systems. Welcome to our show. And let's start off by just throwing out to the panel here your thoughts on what is interesting in 2016, looking backwards. Why don't we start with you? Go ahead.
Thank you, Chris. Pleasure to be here today. 2016, this was an interesting year. I know we're going to talk about acquisitions. In my wheelhouse, in the semiconductor business, there's been quite a few of those. I'm sure many people are aware of that. And also the need for larger data transfer, and many people refer to this as bigger pipes, fat pipes. My view looks at a lot of the semiconductor functionality that's needed to support these bigger data rates. So that's something that I saw really step up this past year and continue into 2017.
Was there anything about that aspect that caught you by surprise?
I think surprise from just learning a couple of the new trends, especially in storage, the move to solid state memory. I was frankly surprised at the progress and also, honestly speaking, the price point of these kinds of solid state devices, right? The price is coming down. They're starting to become more mainstream and very much working their way into the large data centers.
Now, the downward pricing pressure has come from the application end, but have you seen the price reductions as a result of manufacturing efficiencies or other factors?
Partly. Frankly, the other part of it is just to increase adoption rate. I think the companies initially are willing to sacrifice a little margin in order to get these products out there, get them in boxes and servers and storage servers, and get them out in the field, and then work backwards a little bit to improve margins. Many times that's done in the semiconductor business. You can't change the market window, so you have to get your product out there in time and then kind of go back and do cost reduction.
Now, Steve, as an analyst, I know you would have thoughts on this area in particular.
Thank you. Thank you, Chris, for having me here. Thank you, Bill, for leading us off. And Tom, thank you for being with me on the stage as well. Spent a lot of time looking at the semiconductor industry. We were having fun prior to the show talking about the memorable characters in the industry and how if you met your targets for design work, you could do something like a 3-hour lunch on a Friday. There were companies who would celebrate, have a Friday afternoon beer blast. This is long gone. Wall Street, or if you're in San Francisco, Montgomery Street, exerts its influence over the semiconductor industry, almost to the point of specifying what kind of products you should build and what kind of margins that the Wall Street would like to see on those. Not necessarily a cruel hand, but definitely a firm one. What surprises me about 2016 is the scale of the mergers, acquisitions, the authority of the financial community. I thought we broke records several years ago when Texas Instruments acquired National Semiconductor. I believe that was a $4.2 billion acquisition, and TI will be straddled with debt still to this day. But did my phone ring? The financial community wanting to understand what was happening there. At a point, we could look at that and say there are product synergies. Worried myself, other analysts worried that was there an overlap between what National would build and what Texas Instruments. It turns out they built similar products, but one had a very heavy footprint in the industrial market. Others had heavier footprint in consumer. Mobile technology was still in Texas Instruments' business plan. Now what we're seeing is similar kinds of matchups, NXP and Freescale, but now Qualcomm, looking at, there's a slide that you could pick off some of the names, Qualcomm now hoping to acquire NXP, Avago acquiring Broadcom, $37 billion. The Analog Devices building its power management activity with an exceptionally high bid, $14.8 billion for Linear Technology Corporation. What we're seeing with this is the industry changing over, that the financial people will be generous and supportive, but they do want to see the returns. What I think our conversation here would be about what do we anticipate seeing as a consequence of these mergers and acquisitions.
And your observations on that particular area?
Well, so you mentioned you mentioned Avago buying Broadcom, but then they changed their name to Broadcom, and they just recently had an acquisition of announced an acquisition with Brocade. So there's so the acquisition continuing. I can see that as a trend in the future. Acquisitions, partnerships. There's a lot of interesting trends going on. For instance, in the partnership side, there was one in the memory space this year, and there's the traditional NAND flash solid state memory, but there's other emerging memory technologies out there with a lot of different acronyms. There's one called magnetic random access memory, or MRAM, and there's a company, it's probably the oldest startup that went public this year, Everspin, making these magnetic random access memory. And they have a partnership with Global Foundries to make the 300 millimeter wafers that will be the basis for those, for making those mass production of these magnetic random access memory devices. So there's interesting things happening because these are devices which could potentially replace the memory within the computers themselves, not just the peripheral memory or the storage, but the actual memory, because they're as fast as, the acronyms DRAM or SRAM that are currently being used. So there's interesting partnerships, there's things are going on. There's, I think another one you'd mentioned before, Stephen, was SoftBank acquiring ARM, for instance.
$32 billion.
Yeah, and that's a really interesting one because we're seeing, I think there's some deeper reasons within these companies of why they make these acquisitions. Sometimes they're not apparent because they're very different businesses, but they're excited about getting into it. There's and ARM is in what I think is one of our topics here, which is the Internet of Things, which is going everywhere into industrial application, into consumer applications. Some other things I see happening besides the new memory markets developing, which will go into next year. And its explosion basically in, both in consumer devices as well as the enterprise, is that this is enabling, and it's hard to see what's the chicken, what's the egg here, what's driving the other, but we're ending up with 4K television, higher resolution content. That's driving the demand for the delivery of that stuff, bigger pipes, but also for making this stuff. So we're getting higher resolution, higher what's called the dynamic range, which lets you have bigger difference between the dark and the light areas in an image, more like what we see. Higher frame rates, so we get something that can look potentially like real action. Bit depth in video. These are all things that are coming together. They all impact the storage, they impact the bandwidth. We need these technologies to enable that, and we're creating these technologies with that with those enabling capabilities. That word came off a little weird.
I take your point. I think at the top level, companies see opportunity in technology and they scramble now to go buy a piece of that technology they don't have. For example, you have Qualcomm buying NXP. I mean, there's an opportunity there, a big one in connected cars, autonomous driving, and I think Qualcomm felt nobody has more automotive products or skin in that game than NXP / Freescale / Motorola. If you look at the history of that, they're gaining a huge doorway into the automotive market, which they're squarely aimed at. I mean, these are guys that are in just about everybody's cell phone. So the next obvious thing, mobility-wise, is automobiles. Only 1 out of 5 cars are actually connected to the internet or to another car. So there's a lot of room for growth. Autonomous driving demands that you're going to need to talk to other cars, as well as the net, or the internet, or some base station somewhere along the road. They're going to have these things.
So the edge. Yeah.
So I think Qualcomm is thinking, gee, I need all the pieces to put that together and run the table on that. So similar to Avago, PLX, Broadcom, LSI. If you look at that whole thing, that clearly was a play into networking and storage. I need this piece, I need that piece, oh, I need this piece. And I think that's going to accelerate. I think that is the trend we're going to see in the next...
It could, but there's one thing we have to be careful of, and that is that the security on the IoT devices, at least a lot of the stuff that's out there in the field now, is not what it needs to be. In that latest denial of service attack that was done a couple weeks ago, they were using internet-connected video cameras as part of the attack. So we need better security in these devices to prevent invasions of privacy, but also recruiting these devices to serve purposes which are not intended.
But if those devices have such a low price point, what's the incentive for the manufacturer to develop something other than the default password that's already embedded in those devices?
I think if it gets bad enough, people won't use them. The market will disappear.
Xiaomi, the manufacturer of the cameras that were invaded, said they had a static password. If we anticipate the user is going to be lazy on his installation, you have admin. And it was interesting how
password, admin password,
the recent ARM conference, TechCon.
Right.
You would hear ARM technologists going from session to session muttering admin, or baby monitors everywhere.
How creative is that?
The CEO, mentioned CEO of SoftBank, I got a sense listening to him in keynote that he was sincerely interested in becoming a semiconductor industry and being on path to growth, carried by the IoT. But he said, look, one of our nightmares, we may have 1 trillion ARM-based sensors out there, most without any kind of encryption. Yeah. So this invasion of this attack on availability of services is something to worry about. The code, I understand, was in the public domain, and would go look for redundancies in passwords. If somebody had password 1 on one machine and had another machine, a cell phone, that said password 2, they could exploit that redundancy to mount a denial of service attack. Yeah. So it becomes part of our many different things to worry about as we expand the Internet of Things. 20 billion devices out there in 2020, according to...
Automobiles. Imagine if somebody hacked into that system and you have autonomous cars out there. You're talking human life. Not just, they stole my data on my laptop. Now you're talking about your life.
Or they're even talking about connected devices within your body.
There you go.
So the liability issues, if we do not deal with the security problem, are just going to be enormous.
So I think it's deeper than that what most folks see on the surface. To get back to your question, I think fundamentally there would be regulatory measures put in place that said the system has to be X amount secure through software riding on hardware that can accommodate all that to make it bulletproof. Last thing you want is somebody hacking into your autonomous driving car and steering you into another lane, but that conceivably could happen if the security's breached, right?
Yeah, we're entering into an environment where regulatory oversight is likely to be lessened.
Yeah.
The incoming president has suggested that he would like to do away with a lot of regulations. So to what extent does private industry have an obligation or an economic incentive because of the demands of the marketplace to put these safeguards in place?
Yeah, well, fortunately, beyond just federal regulation, there are technical committees like IEEE or consortiums or industry standards that exist out there. And I think somewhere along the line, engineers will get in a room and say, look, we're proposing a standard to raise security here. Whether the government has to come out and mandate that it be put into place may be secondary, actually. I think if enough companies got together, and I know there's efforts already to standardize the standards for cars talking to another, it's vehicle to vehicle, using short-range communication. So perhaps there is a layer of security that those committees are looking at. I have to believe somewhat in good faith that we'll do the right thing as a society. If we're all on the road, there's going to be some standard that says this is the minimum required for security.
But I think a lot of it is going to be driven by the industry, and there are trade groups. There's a group called the Trusted Computing Group, for instance, which is dealing with the security and encryption of data at rest, as well as data, data in motion.
Right.
And I think that those are the kind of things that need to be more broadly implemented, need to be incorporated into our security plans, especially on the Internet of Things, just because it's going to be so ubiquitous.
Yep.
And so as the M&A accelerates in the industry, particularly in the semiconductor industry, and there's fewer and fewer companies, does that make it easier to put these regulations in place, or does it cause some problems as the company has the same standard throughout? I'll throw that out to all of you.
Well, a standard needs to be broadly implemented to be useful.
Sure.
And one way that can happen is if a company owns the whole market, essentially they can create a de facto standard. But the normal way which is done is, of course, with trade-offs between different groups and coming to an agreement.
And there may be, traditionally, even amongst at least my IEEE experience, there's usually 3 or 4 versions of a spec brought to the table.
Yeah.
And frankly speaking, the company that was biggest and spent the most money and had the most resources was usually able to ramrod their version through. So in your scenario, let's say we're down to just a handful of semiconductor companies. You could argue that it may actually be easier in a way for just a few to sit around the table and agree, rather than have in the past been in committee meetings where every company had of some version, and there might be 12 or 15 companies on this committee. Would take months and months and months of red tape and haggling and so forth to try to get to just one spec.
Question, Bill? Is the current environment where big company marshals forces and joins another big company, does that standardization process become easier, or does it become more difficult? What sort of competition goes around the table in that environment?
That's a really good question. I have to believe that if as companies acquire other companies and get their company skill sets around that table, that it might become actually easier, not harder. Because you now own maybe your competitor, like let's say Analog Devices and Linear Tech want to, maybe before they sat on opposite sides of the table, but now they're just one company. So somebody somewhere inside is going to get those guys aligned before they go to the meeting.
Economic drivers will make it happen.
Exactly.
Yeah.
Okay, so when you have a merger plan, if you're a large company, you're looking at many things, but having your technology expanded into new market segments, and also to acquire technology to assist you in developing your own market internally. Where do you see the trend occurring in the semiconductor market?
So internal acquisition versus development, is that?
Well, yeah, acquisition of market share versus acquisition of technology.
Okay, so that's kind of the buy versus build
sort of
paradigm, right? Sort of. And I really think companies are smart enough to know, and you see it as the result of all these acquisitions, is that if they can't make a market window, there's a need maybe 2 years out. It's going to take them a lot of money to hire people, get them trained, and go through that product development cycle. They just as soon go out and acquire it. And I think the buy side has become almost the default when you look at. And again, I'll go back to Qualcomm and NXP. That's a classic where they're clearly lining up all their automotive IC expertise, right? And that's going to be quite a bit. It's going to be a pretty formidable relationship there if they can manage it properly internally, right? We know that not all these mergers go smoothly. Not everybody's happy, and some key talent is going to have to be retained, right? Not chased out the door due to somebody's not paying attention to the key people that they need.
Steve, you want to jump in
You
on this?
mentioned there's an article in EETimes just this week. Junko Yoshida speculated on the NXP Qualcomm partnership. And what she underlined, automotive was in there, security was in there. NXP has a major footprint in things like passport chips that will do encoding. But what she called attention to was the Internet of Things that they're bringing to Electronica, which is going on in Munich, Germany this week. Reference designs for access points, not just the baby monitor to
Like
the cloud, but it's to gateways featuring hundreds of access points.
Right.
With the idea of now we're going to look at this as a almost the same as you would for data centers. Try to aggregate the data, analyze the data, use the data, but that becomes an important part that Qualcomm didn't have, and NXP feels that they have major muscle to show.
And that gateway can be a point of security.
Yeah.
In other words, it can sort of protect these other devices from invasion by itself being a point of security.
So there you have a good example of a company that has 2 or 3 skill sets, right? Inside their new box, right? And they can combine those, come to market, get significant market share, and make their shareholders happy. You know, back to your original point. At the end of the day, the bottom line is looked at, stock price is looked at. I'm sure that's a big factor in many of these, but beyond that, they have to know where to aim their financial cannon, where to aim the checkbook, right? So somewhere there's a technologist inside that company saying, look, this is the trend, this is where it's going, we can make X amount of money, but we need this piece, or we need that piece, right?
But as you said, it's a successful integration of that. You know, it's like keeping the key people who are involved in making that happen in the new acquisition. You know?
Yeah, and that's not easy to do.
It's not.
We've seen a number of companies that people are not happy about their new parent or the merger, if you want to call it that. So that's sometimes that's not paid enough attention to.
But it's one of the key. The people are still, you know, a key
End
part
of
of
the day,
technology
it's
is
people.
people.
So if I'm looking at my company being acquired and I'm saying to my friends, look, we have a great idea. Why don't we go start our own company? That's the Silicon Valley way. There's 2 different ideas when you start a small company for your exit strategy. One is that you go IPO and eventually you make a lot of money like that and you move to Tahiti. The other is that you're acquired by a larger company. Do you see the trend going one way or the other in the last year or so?
There's a lot more acquisitions, it seems to me, than IPOs. I know a few IPOs, but
It's certainly an easier path, having been a person who both was a co-founder of my own startup and having been at a company that's been acquired 2 or 3 times and been an acquiree. In larger companies, we've done some acquisitions. It's definitely easier if you have some skin in the game, which I happen to have in that one instance. We very much were looking for someone to come in and buy us. We really didn't think at the level of technology that we had that we were going to, go and do an IPO and actually have enough runway to do that. We were fortunate. We had a company that came in and took a look around and said, "Oh, there's some good skills in here. This is a piece that we need for this bigger vision," and they bought us. So that worked.
Oh, go ahead.
No, that actually looked good to me. Diodes had been almost like a commodity supplier of power semiconductors.
There you go.
And you were the high-end edition. It was like the more precision
Good
parts.
point. Wasn't thinking of that in this equation, but yeah, that's a good example. I think all of us at Pericom were thinking, gee, we're being acquired by a company called Diodes. But it's turned out that we've opened many doors for them in the engineering door as opposed to maybe a procurement door with lower functionality product. And on the other hand, they bring to the table very heavy skill set of manufacturing. Imagine how many diodes you need to sell to be an $800 million company,
Yes.
right?
Yep.
So they know a lot more than we do about manufacturing, and we bring some good skill sets to the game. So I think and there's no product overlap, which is rare. So I think at the end of the day, it was a good deal, as Steve points out. You know, he noted that.
So when a technologist decides to start a company, if they're self-aware enough at the beginning to say, okay, I need to look at whether I'm going to have an exit strategy of going public or being acquired, are there differences in your experience in how the business plan is structured to go one path or the other?
Definitely. Oh yeah. Big difference. I think if you really think that you're, say, 3 years out, you're planning an IPO, your burn rate, that you're basically burning other people's money, right? And
I got a T-shirt out of it, though.
there you go. I was at a company. That's about all I got out of it
yes.
too. You know, maybe a pen or a,
Yes.
unfortunately. But at the end of the day, you may have, you're going to have investors are really going to guide you and let you know that they're not going to fork over any more money. Usually the path to an IPO is longer, in my experience at least. And that requires, nowadays especially. A lot of my experience has been, a few years back, it might have been, you could argue, a little bit easier to get funding back then. And maybe you think about an IPO every day, it's like, wow, wouldn't that be wonderful? But I guarantee you, if a good offer comes in, those investors are right at the table seriously looking at that, and probably 8 times out of 10, if not 9 times out of 10, they want to get their money back. They're going to go, I want to make 30% on this, or I want to make, this is close enough, we're taking it.
There's not a lot of long-term money in a sense. There's some out there.
They want to flip the money. It's almost like these house flipping shows now. They acquire it and then they want to move on. They want to get their money back and go to the next startup, the next great idea.
In a similar vein, the concept of companies that may have been public in the past going private to deal with the regulatory issues, the quarterly wind sprints and like. Have any of you seen a trend in that area?
There have been companies that have done that in the last year, like Seagate did that, for example.
Dell.
And then
Dell's another one.
Dell's another one. And sometimes
Avago did that.
They'll go private for a while, so they can do investments they couldn't do while they were public because they have such a quarter-to-quarter emphasis. But you can do longer-term investments sometimes, a private outfit, and then they might go public again after that.
Yeah, I think the trade-off there is to go private, you have to have a lot of money to buy yourself out, right?
Exactly.
To buy out the investors. And you now have a new group of investors, right? With different goals and aspirations and maybe margin in mind. So I'm sure Michael Dell went through all this, right? Probably figured out, gee, I can't make these moves I want to make, and maybe buy an EMC was one of them, right? Because we're a public company. So now let's flip it around. If I'm private, I can do more things.
Right.
Sure.
So
Yeah, that's the biggest one.
I'd like to pose a question. You talked a bit about dissatisfaction on some of the acquisitions. How have the engineering roles changed? Does it make a difference if you were bought by a semiconductor company or a non-semiconductor company? Or how is the new engineer look going forward?
All right, well, I want you to hold that thought because that's a forward-looking question.
Okay.
Because we're going to wrap up our segment right now, which is looking back on 2016.
Okay.
And our next segment, where I'm going to ask the three of you to come back, we're going to talk about looking forward into 2017 and on, and we're going to start with your question. Thank you so much.
Okay.